Welcome to Lockbox, a podcast providing real estate professionals with action items for success. My name is Jeffrey Broger, and I'm going to be your host. I'm the founder of two real estate marketing and tech companies, STEEZY.Digital and RealNurture.io. In this podcast, you'll learn from top 1% real estate and mortgage brokers the exact secrets to their success. Welcome to Lockbox.
Welcome to Lockbox. My name is Jeffrey Broger, and I'm here today with Paul Nagai. Paul, thank you so much for being with us.
Jeffrey, thank you. Exciting to be here and glad to be on.
Awesome. Well, why don't you tell our listeners first who you are and where you're from?
Sure, absolutely. So a little bit of background. My primary kind of area of focus is really around business transformation for commercial credit providers. And a big part of that has certainly been in the mortgage industry over the last 20 years, where we've had the opportunity to help people do a lot of different change, whether that's for growth, whether that's for efficiency, whether that's entering different parts of the marketplace. And so that's been very exciting. In terms of kind of how I got there, I really started my career in the consulting space quite a few years ago now. Then did that for about 11 years, where I had the opportunity to work not only with a number of large consumer banks, helping them to do a variety of things, including mergers, acquisitions, different types of process optimization work. And eventually, during that part of my career, got into the consumer credit space, and more specifically in mortgage, where I was able to help a number of different companies as they went through sort of the changes that happened in the early 2000s and late 90s. And then after that, decided to join industry, went to work for an investment bank for a couple of years as part of their fixed income and mortgage division, and then joined a consumer bank after that as part of an acquisition, which allowed me to really spend a fair amount of time. This was during the sort of 2008 timeframe. Really allowed me to work very closely in the default space, where we worked through all of the home affordable modification programs, if you recall those. And then in 2010, I went back into consulting for one of the big four consulting firms and really helped build out their mortgage and consumer banking practice here in the New York area, which is where I'm located. And then a couple of years ago, a group of us decided to jump out on our own, and we've been doing that since about the 2020 timeframe. And it's been, really a lot of fun to work with both the larger institutions as well as spend time with the upcoming fintechs that are out there, helping them to not only position themselves in the market, but obviously just to build their products and help them position for growth.
Interesting. Yeah, interesting progression and career, as well as the experience with one of the big four consulting firms and just the whole weaving fabric of, what brought you to where you are today. So one of my questions that I ask every guest, it's really related to your entrepreneurial habits that have experienced success for you throughout all these different situations, careers, journeys. And so that question is, what is the single most important action that you take on a daily basis that you attribute most to your success?
That's a great question. And I think that it's something we, kind of probably adjust through our careers. But I would say the one that's really been constant is just reading and constant learning. For me, at least, it's very interesting to really check out what's current. So I read a number of different newspapers, a number of different industry publications on a regular basis. When I have access to it, I read a lot of the news feeds that come through different services, the different news clipping services. And, from my perspective, just really keeping ahead of the curve in terms of technology, in terms of what the market's doing, and what the factors are that really influence the market are very interesting and certainly very important to anticipating where my work is going to go and where my clients are going to go and what's going to be important to them and what they're going to want information about. So I would say reading is probably the most important thing that I do on a daily basis to stay current and to, that I would attribute to my success.
Okay, that makes sense. And it seems like the reading that you suggested was more current events, consumer reports, things of that nature. Do you also have any great books that you would recommend?
There are so many good books. I love to read some of the business biographies. The long-term capital management story, I think, is always interesting. This where genius failed. And I definitely like to read a number of the business books that give you insight both into the history and just stories that people have gone through in their careers, as well as some of the methodology types of books. There's a really interesting book that I always recommend to folks called The Knowing Doing Gap, and how you kind of turn information into action. And it's an older book, but it's got great points to it that are relevant today as much today as they were in the past, and really focuses on how do you take great ideas and turn those into real products, turn those into real action, turn those into market activity. And of course, that's always easier said than done and takes a lot of discipline, I think, in successful companies to do it.
Absolutely. And being a consultant for one of the big four and being able to work with, clients that most people wouldn't have access to, it gives you an interesting perspective on that exact topic on, looking at products, looking at markets, bringing them to market in an effective way, managing teams. And so, I'm really curious to learn with the projects that you might be working on today. I think you're helping some fintech companies to, better either position their product or come to market. What's the big trend there as far as something that you see come up often? Maybe it's more like internal culture, it's the lack of product market fit. So I just know that from reading very vast variety of books, it seems like many entrepreneurs create a product where there's no market. They don't do the market research and testing prior to. They think they dream up something that they think is cool and they bring it to market and no one buys it. So I would really love to just hear your perspective on, that whole startup fintech area and seeing so many companies that you've seen throughout the years.
I do think that you hit on such an important point there. And it's actually an area where we spend a fair amount of time with companies. There is such a proliferation of great technology today. So many new things coming into the market, coming online, and the technologies that are out there, whether it be, basic things like workflow, or whether it be the more advanced things like artificial intelligence. There's a lot of new technologies that are continuing to enter the market, but the real challenge has always been aligning those with a business need. And so we do spend a fair amount of time with people just helping them understand. And the way we position it is, what problem are they trying to solve? And it's very important to, really think through that. And I think you made an interesting observation that there do seem to be a lot of technologies that don't necessarily find a place in the market because they're not solving a problem, and they might be interesting, but they're not doing something, at least not currently, that people want to be done. Now, I do caution people against sort of ignoring or dismissing some of those technologies that people don't understand yet. Because I certainly think that through history, we've seen a number of examples where products have been brought to market that people didn't really know that they wanted them or needed them until they saw them. And once they did, they said, wow, I'm not sure how I ever lived without a smartphone. And so there's that as well, but it can take time to get there, for that to mature, and frankly, for the market to mature around it as well. So I think that there's a lot of things today where there's a tremendous amount of buzz. And I think the biggest one is probably artificial intelligence. A lot of buzz around that today. And there are aspects of that technology that are very mature and are well known, and they've been around for a while and just now sort of reach their potential. And then there are other aspects that probably have a few years to go before they're mature enough to be useful. And to some extent, that is also impacted by the ability of the regulatory community to catch up with the technology as well. So certain things that we've seen people focus on, like automated underwriting and automated valuation models and things like that have great potential and probably work very well, but are still a little bit difficult to explain. And when it comes time for a compliance person or team to evaluate whether or not that tool is working as designed or what that design is, it can be a little bit more difficult to explain than some of the more traditional methods. And so I think things like that will also always be a little bit of a weight, if you will, on some of the newer technologies. Having said that, there's other ones that are have been around forever, frankly, and today they just have reached sort of their potential due to a combination of processing power and surrounding support. And the one I think of the most that we actually did some work on recently is around document processing. And this has been an area, particularly in the mortgage industry and in consumer credit more broadly, that's been very challenging for people for many years. And the ability to, read different income documentation and things like that and pull off the information that you need. And historically, that's been very manual. And it's taken large teams of people to pull that information together and then evaluate it. And some of the capabilities today are starting to really make progress in terms of automating that, whether that's through things like intelligent OCR, which is the extraction of information off of document images, or whether it's the use of different machine learning capabilities to more quickly recognize and extract that information. And I think both of those, while they're capabilities that have been in place for a few years, they're now starting to reach that maturity phase where they can be reliable and used by people and really contribute to the overall efficiency of an operation. So that I think those things are great. There's some other ones they're probably going to take a little bit longer, particularly those that.
Well, I want to stop you there really quickly because I have a follow-up question based on the first example that you gave of some newer products that, maybe they're artificial intelligence, blockchain, certain products that certainly have great potential and use. However, they have yet to be adopted by the majority. Laws haven't caught up yet. And, my question there, I had two of them and I wasn't sure which one to ask first. And then at the end, something that you said prompted me to ask this one first. Do you think it's more of a messaging problem at times than a understanding or, compliance problem? And I say that because Simon Sinek talks about the law of innovation adoption and how there's the early majority on a bell curve. And then, there's the innovators, early majority, and then the majority and all these things. And in that discussion, he was talking about how the companies that really get to the point where they receive that mass market acceptance, they're the ones who are leading with the message of why they're doing what they're doing. And their messaging is really tight and on point and belief based. Like, I believe in this greater future that we can do this XYZ faster, better, more humanely, whatever. And by leading with that messaging, it helps to then propel them into that majority to where the laws change and things really shift later. So my question really is about how important is messaging when you're coming to market with a new product that might be extremely innovative. And like you said, it's kind of hard to explain. I just wanted to focus on that messaging aspect for a moment.
Yeah. And, I think Simon is a really interesting guy in terms of the focus on why, right? Why do you do something? And that being a big driver of your sales message. And I do think it's very important. And it clearly messaging is very important from any type of product communication standpoint. And there are certain products that are very clear about what their value is, why you would want it, right? And there are other products that are maybe not as clear about that. But I think in this case, I'm not sure it's as much of a messaging challenge. I think it's a understanding challenge for some of these tool sets. The value is actually quite clear on most of them. The challenge to date has really been the ability to deliver that value. And so, and if anything, the providers have probably, and again, I don't want to say they're doing something wrong but they may have oversold the capability a little bit. And because that's happened for the last, 5 to 10 years, the buyers tend to be a little bit more skeptical of whether or not some of the products can actually deliver what they say they can deliver. So I think they have their messaging right. I think their delivery probably needs a little work. And then on the back end, when you think about the ability to regulate and apply compliance to some of these tool sets, that's where the bar goes up a little bit in terms of being able to prove that what you say is what you really have. One of the key sort of doctrines that's being discussed a lot right now is the concept of disparate impact. And disparate impact is really where a model or a process or a methodology tends to treat one group differently than another group, even though that may not be the intended intention of that model. And the result, though, is what really matters. And the result is what certainly policymakers, lawmakers are looking at. And because of that, it's very important that people understand what aspects of their tools are creating a disparate impact, and just by a factor that was unplanned, or if there was indeed something within the model that biased it one way or the other. So I think that's very important. And there's a ton of visibility and transparency on this today that hasn't necessarily been there in the past. In the past, the focus was really on the concept of disparate intent, and that's very different. So that's where you intentionally bias a model or a decision on a factor that moves it one way or the other, as opposed to not intentionally doing it but having it end up there anyway. And I think we've even seen that in some recent news about the models that, say, Amazon was using for its HR decisions, where they found that there were some biases in it, even though they hadn't been designed that way.
Got it. Yeah, that's a very interesting topic. And mentioning some of these newer, more advanced technologies, machine learning, HR modeling, things like this, in the real estate industry, where do you think things are heading? Like in 5 to 10 years, what do you think the real estate transaction will look like? Where do you think the markets are going? I'd love to hear your projections.
Yeah, I think there's a couple of really interesting things going on from a mortgage perspective, specifically. One is that the application process, the underwriting process will be highly automated in a few years. It'll be interesting to see whether it'll be 100% automated or not. There are certainly challenges that I think are less about the industry and much more around the policies. I think about the fact that there's over 3,100 counties in the U.S., and of those counties, there are still some that don't allow recording to be done, electronically. And so, this is going to be an issue, and you may have all but two that are, but you still have those two then to deal with. And so from a technology perspective, we could be much more automated than we are today. And I think that over the next couple of years, we'll see that catch up. Ironically, the pandemic really helped, frankly, that process. It helped to accelerate that digital process and the movement towards remote types of activities, whether that be, notarization or whether that be signing documents. And so that's been good because those things will be able to continue through. And so I think this period of time really accelerated some of that. And now we're sort of left with the few areas that just have not adopted technology in general. Some of the things that I mentioned earlier in terms of document processing, that's going to be an area where the real estate industry will benefit tremendously from an efficiency and speed perspective. I think there's also, I had a discussion the other day where the adoption of technologies like Plaid and Yodlee, which are those aggregators of your financial information, have really grown their participation dramatically over the last couple of years. And that's helped, that will help tremendously when it comes to ease of applying for credit in the future. So I think all those things are very good. The blockchain topic is kind of interesting. You brought that up. There's really a lot of opportunity for that technology in real estate. And we've had discussions with people around a number of different areas that they're looking at, whether that be NFTs, which could potentially be attached to real estate in the future. The one that I love to envision, but I'm not sure where it is in the marketplace, would be leveraging blockchain for title, for example, where, once you confirm a title, you could put it out there on a public ledger, and then you could really speed up the process of transferring that to different owners. So I do think that the blockchain technology will have a positive impact in the mortgage space. And initially, probably the area we've seen it really expand the quickest is in the use of, or I should say, the creation of blockchain-based assets. And one of the major participants in that space right now is doing that for home equity loans, where they have those out on a blockchain that can then be traded. So the ability to trade loans using blockchain technology will certainly expand the market in the next couple of years.
Yeah, it's interesting. And you mentioned it, blockchain's a public ledger. And the philosophy there is that there is nothing lost in translation. You can see every single transaction that has occurred. So when there's a transfer of ownership, everyone in the world can see. It's very easy to prove, and it creates a level of transparency that just isn't available today. It's interesting how that might also relieve clouds on title and certain title issues that do come up later when you're coming across distressed properties or properties that have been handed down through trusts or generations. It can get kind of messy of who owns what, how much. And so, blockchain, not only is it digital, but it's also a public ledger that would be supported and transparent. So very interesting technology that I have heard of some whispers of, title being started to transfer through blockchain or Bitcoin or NFTs and things of that nature, and using that newer technology, just very rarely, but I have heard some whispers of it. So I do anticipate that being a major part of the transaction in the future as well. It's interesting,
Go ahead.
I just think about companies like Tesla, are they reinventing the car buying experience? That's probably the second largest purchase someone will make nowadays. An average SUV or something is like $70,000, $80,000. And to think about how much that price has inflated from, back even just 20, 30 years ago, it's certainly correlated with the increase in house prices, how they've just inflated so much. And the median income, if you look at those graphs, hasn't inflated that much more, but also the availability of very inexpensive money, the Fed offering rates, very, very low to then let these dealerships offer these crazy car loans and things like that. Very interesting topic there. But more focused on how Tesla has reinvented the car buying experience. I find that interesting when it relates to the real estate transaction, because although a new car is not the same as a used house, and there are a lot more intricacies and little things that can go wrong here and there with a house that's been lived in for 30 years as opposed to a brand new Tesla off the lot, there has been some first principles innovation in the entire car creation and car buying experience that have fundamentally shifted the car industry. So I think that, with major companies looking at real estate as one of those next industries to disrupt, it's just a matter of time before the real estate transactions is reinvented as we know it.
Right. No, you bring up a great point, and I like the discussion around Tesla because it is an intersection of both innovation in a delivery mechanism and a technology as well as policy. And I think one of the things that unfortunately many technology companies either struggle with or neglect to look at is that intersection with policy. And in fact, there was an announcement just a couple of weeks ago that the Consumer Protection CFPB is going to be looking more closely at non-bank fintechs in the coming years. And so that's going to dramatically change the kind of focus and structure of how they do business. And I think one of the interesting things about Tesla is that they, were able to go direct to consumers, which was frankly a policy victory. And for other car companies to do that, it will disintermediate sort of the concept of the dealer and some of the state laws around who can actually sell cars.
Right.
So there was a tremendous policy decision that helped to make that successful. And frankly, I mean, he's done a phenomenal job of really taking advantage of different policy anomalies in his overall business model. I mean, the tax credits you get on electric cars, the fact that you can sell carbon credits to companies that don't have good mileage and things like that. So those have all contributed to the overall success of that business model. And I think it's been, really quite genius the way that he's pulled that all together. So in terms of how does that translate to the mortgage industry? I think that we will see some innovation, but it will be coupled with those policy changes. And, it's really interesting to me to just see through the history of the housing market, how policy has really impacted, the buying experience, the uptake. I was looking at some of the, numbers around home ownership rates. And if we think back to when the, Fannie and Freddie were created, the government-sponsored enterprises, there were goals around home ownership that, as a nation, we've never achieved those goals. And we've always sort of sat around a, 55% home ownership rate. I think it got all the way up to 60-some% a few years ago, and then it fell again. And so there's could be a question around, is there a sort of a natural place where that home ownership rate should sit to allow for both flexibility and mobility, as well as to take into account just the changing demographic of the buying community. So policies aren't always aligned, with what's most efficient for the market. And so I do think that a lot of the, to get that last mile, if you will, of efficiency in the mortgage market is going to require some adjustment to public policy for sure.
For sure. And I would argue that public policy reacts. It comes after. And I mean, the Dodd-Frank Act is a perfect example of that. The mortgage industry was offering way too risky of loans for 2 or 3 decades. We had the 2007-8 financial crisis. New policy comes in to restrict that. And then on the opposite side, with technological innovation, the ability to reduce the paper that is used in this paper-heavy transaction, cut down less trees. Maybe the offset we discover of running blockchain for every single transaction on earth in real estate, as opposed to cutting down the amount of trees it takes to print all the paper for all those is just, 1 to 100% difference. Then all of a sudden, okay, that lines up with sustainability. And then this new policy to do real estate transactions through blockchain is now supported, and you get a 1% discount on your real estate purchase if you do the blockchain transaction. And then some lenders support that. Like, I totally agree with you that it's overlooked often when tech companies are coming to market. And I'm also very in tune with this because, I have a marketing agency in the real estate space. And for me, I'm much more of a copywriter, marketer. I want to think about messaging. I want to think about, the product, the market, what's the market's desires and needs. I'm not a law guy. I'm not thinking about policy and how could we be supported or hindered by current policy. Should we be lobbying for a certain policy, or is one already being lobbied that would help us and we could help support it? That's not even on my radar. So I think it's very common for that to not be on the radar of many other startups as well.
And I think that that's actually beneficial to some extent. And let me explain what I mean by that. It's very easy to, dismiss good ideas because they haven't been done. And usually the reason they haven't been done is because there's some, rule, regulation, history, tradition that has prevented them from being done in the past. And so I certainly encourage people to think more with a white sheet of paper and say, if it were, if you could draw it up from scratch and it worked the way that you'd like it to work, how would that be? And then focus on, getting the rules adjusted to either accommodate it or to account for it, is probably the better word, is a better path than, trying to sort of weave your way through all the rules first, because you may never get to a solution at all. And so a lot of great ideas would probably get shut down very quickly if you started by trying to weave through all the rules. So I think it's best to start with a great idea and then figure out what rules, will impact it. Can they be changed? Should they be changed? Are there minor tweaks you can make to accommodate them? That's probably the path to innovation.
I agree with you. And what rules should be changed is maybe the one that comes up most, because if you start with a great idea, but it hasn't been done because of some policy, well, that policy might be outdated. It might be, might have been persuaded by something in the past that is no longer relevant. And it's very important to not be restricted by that. So I agree. I mean, I never resonated with the thought that, everything's been invented. I heard that in college, like, you have an idea, go Google it, it's been done or tried. You shouldn't even try anything. It's like, well, that doesn't make any sense to me. We're always constantly innovating. And to have that type of closed off mindset would kind of be the same as looking at all these laws restricting business, or, it's really difficult to do business in California with the taxes and the restrictions. You shouldn't even try it. It's like, well, you can still make it work. You could still, and maybe if you do find some innovation or success and there's something unjust being done based on policy, you could then lobby to change it. And there's things that could be done later. But I agree that, start with the inspiration and idea and fan that flame, let it blossom, get feedback, continue it to grow it and get it to a critical mass point to where then it could be important enough to influence policy. Great topic though. This is never talked about, the whole policy aspect.
Yeah. And I think that, you hit on an interesting point, which is there is kind of that belief that everything has been thought of and everything's been created. And there's probably a little bit of reality to that, which is most ideas probably have been conceived. But back to our earlier topic around the books, one of the biggest disconnects that I personally see is that having a great idea and creating something from that are wildly different. Wildly different. And, a lot of people can say, wow, why don't we do this? But the actions required to do that are monumental. There's an old saying, I think, something about, success is 1% inspiration and 99% perspiration. And that applies today for sure, which is it's very easy to come up with great ideas, but it's very difficult to implement those ideas. And so I agree with you. there's probably a ton of good ideas that are out there already that just, for whatever reason, they haven't made it yet to fruition.
And not to mention technology. Technology might not be caught up to the point where that idea could be reality, but based on, the silicon chip reducing in size every however many years and the exponential increase of technology, maybe in 3 years, it could be possible. And an example of that is virtual reality. Virtual reality is something that today, because pretty much the bandwidth of the networks can only support up to 4K. Well, when you split that 4K to 360 degrees, really it breaks it down to standard definition of about 720. So then you put on this headset and you look around and it's all pixelated and it's not that great. But right. You advance a couple of years and now we can support 16K. Well, at that point, if you can, based on 5G or 6G and data network, not even relying on Wi-Fi, if you can instantaneously with zero latency stream 16K across the world, well, you could put on a virtual headset, there would be zero lag and it would be sharper than your eye could see essentially. So now it's a compelling product, right? But it's the only difference is that technology caught up. I think that applies to so many other, mortgage products that are coming to market across the board. It's not only policy, but it's also, technology catching up and allowing these, like you said, processing power, server power, those types of infrastructure environments.
Well, you're absolutely right. And the topic we talked on before around document processing is a perfect example. The technologies and the mathematical algorithms for doing optical character recognition and even the machine learning concepts have really been in place. I mean, they've been in the academic world for probably 30 years or more than that. But the processing power has only recently become available to make that a reality. And when you think about the fact that the technology that was used to, send the Apollo astronauts to the moon was less sophisticated than what we have in our pocket today by many magnitudes of advancement. And so, yeah, I mean, we have the ability to do things now from an edge computing perspective, which is, doing the processing near the endpoint, like the device. We have the ability to do that now where, that just frankly didn't exist even 10 years ago. And so, yeah, absolutely. That's going to make things, I think, very exciting. In the real estate space, from a technology perspective, kind of outside of the lender and the mortgage companies, it's something it's been super interesting for me to see is the use of satellite views, right? To really understand property. People are using satellite much more effectively now to understand the risk of whether it's geological or weather risk around a specific region. So you have that whole branch of technology, the use of drones and, high quality imaging to do home inspections now. I mean, that kind of thing could absolutely revolutionize that entire transaction process. So I think those are things that, to your point, a drone, the entire system sits on a single chip now. And so it's very simple for anybody to do it. And it makes it very inexpensive. And so now you start to see lots and lots of great ideas. One of the interesting ones I saw recently was there was a tower built here in the city. And as part of the marketing effort, they wanted to be able to show the view that you would have from each floor of the unit. And so they took a drone and at different altitudes were able to do 360-degree views of what you would see in the city. And that's an extremely powerful marketing tool that they could do before there was even, one brick laid. So, yeah, I think the technology won't just be the transaction itself, it'll be all the surrounding things. And, for me personally, growing up having to, mow the yard, the fact that you now have robotic lawnmowers and things like that is going to, change the way home ownership works as well. So, Yeah, it's a very exciting time.
Very exciting time to be alive. So is there a question that I should have asked you or anything that you'd like to expand upon from earlier?
Yeah, we can go whatever direction you like here, frankly, and there's a lot of great things to talk about. I do think that one of the things that might be worthwhile covering is really just what's going on in the market today. I mean, obviously, we've got really a confluence of activities, that being inflation, rates, some kind of global geopolitical instability that are all convening, along with a pandemic, to really impact the housing market. And I look at it from a couple of different perspectives. There's sort of the supply of housing and that side of the market. And the builder community is certainly experiencing a lot of challenges from both labor, supply chain, and those things are reducing not only the ability to build new homes, but of course the overall supply. So that's going to have, and we think that that'll probably have an impact for at least another year or so until things start to get back to normal. On the inflation front, this is something that is very likely to impact two different things. One is just buying decisions in general. And secondly, credit worthiness. So, and we've had a lot of, again, policy and different types of accommodations over the last 2 years that have really helped the quality of credit and allowed people to stay in their homes and stay current on their mortgages. But as inflation starts to creep up, that's likely to impact the ability to maintain some of that credit worthiness. So we expect that to be a bit of an impact. And obviously with rates going up, that's always one of the biggest drivers of demand for credit. And so that's going to probably price a lot of people out of the market that are already dealing with sort of, high home prices due to limited supplies. One of the interesting things, though, that we feel is a positive is that there has been, well, you can look at it as a positive or a negative, depending on which side of the coin you're on. But the expansion of rental homes certainly gives people an option that they didn't necessarily have before. And so we think that will help to moderate some of the price challenges that people have that are looking for homes in a little bit larger space. But in general, I think this year and probably going into next year, we certainly expect this, confluence of external impacts to have a pretty significant impact on the home market overall. And in some markets, we'll probably start to see some price declines as a result of that. And in other markets, it'll continue to grow. So,
awesome. Great points. And I would love to ask how listeners can contact you if they're interested in learning more.
Yeah, absolutely. People can either contact us at our general info box, which is just info@theantarescompany.com. We also have a Twitter channel that we try to keep some interesting things on called Antares Global. So both of those would be great ways to get in contact with us.
Awesome. Well, Paul and the guy, I really appreciate having you on today. And this was a conversation that I haven't had before about, policy, technology, adoption of both and the evolution of both. So really appreciate having you on, having a very thought-provoking conversation regarding real estate, the mortgage industry moving forward into the 2020s and beyond.
Great. Thanks so much for having me. It was a real pleasure.
Thank you for listening. If you want to accomplish your real estate goals, then I highly suggest downloading my free Ultimate Real Estate Goal Setting Framework. The link is in the description of the show, and it will help you break down your annual income goal into the amount of phone calls, appointments, or open houses you need in order to achieve that goal. Thank you so much, and we'll see you next time.